Well, the RBI is in the midst of its monetary policy committee meeting, and disclosures around that are expected to come in tomorrow. But let's take a look at what is expected, what economists are expecting, as well as what is the environment in the economy currently. So let's first take stock of how the environment is and what high frequency indicators are suggesting. Well, CPI inflation has increased to a 3-month high of 4.9%, that is in November of 2021. In December, that increased to a further high of 5.6%. WPI inflation also surged to an all-time high of 14.2% in November, and that came in slightly lower at 13.6% in December of 21. And one of the reasons for that, of course, is the global crude price, which is now just below that $90 a barrel mark. The PMI manufacturing index has eased to 55.5 from 57.6 in December of 21. So it was at 57.6 in December of 21. In January, it's eased to 55.5. As per advanced GDP estimates, GVA, which had fallen 6.2% year on year in FY21, is estimated to grow at 8.6% in FY22 and go beyond those FY20 levels. That's good news, of course. The advanced GDP estimates expect GDP to breach FY20 levels, and government expenditure is set to remain elevated at 11.5% of estimated GDP. The fiscal deficit of the Indian government and the debt to GDP is expected to come in slightly higher. Debt to GDP is expected to come in at 90.6%. GST collections, which were above the 1 lakh crore mark for a 7th month in a row in January, saw collections of 1.4 lakh crore as disclosed by the finance minister in her budget speech. Now, in terms of what we expect from the RBI is expected to maintain its accommodative stance with a slight possible hawkish bias. The possible increase in reverse repo rate is expected in the range of 15 to 40 basis points. The current repo rate is at around 3.35%. It's expected to be increased to 3.5 to 3.75%. Inflation will continue to remain the focus for India, as has been for most countries in the world. Central bank responses and global inflation will also be in focus, and the RBI will be expected to factor that into its statement. The RBI statement on the FM announcement on new digital currency is also possibly awaited. A new digital currency is expected to be issued in FY23, and some commentary around that will be expected from the RBI this time around. The government borrowing has also been enhanced in budget for 2022, the numbers which were disclosed, and that will also be considered by the RBI, and hopefully some commentary around that will throw light and will calm nerves of economists who have been quite cautious about the way they have been giving their commentary around how the budget deficit is going to be financed. It's also likely that the RBI will kickstart normalization and will continue to prepare markets in that direction, hopefully. Also, in terms of other economist expectations, exit from easy monetary policy should continue to be planned and gradual, is what economists are expecting. The second major expectation is concerns around imported inflation is set to continue, so some measures around that from the RBI is hoped. Also, lastly, commentary around the fiscal deficit and how that deficit is going to be managed. We did discuss that point. In terms of major macroeconomic metrics, let's have a quick look at where Brent crude was at the start of December. That's when the last MPC meeting was held. That was at around 71.7. Currently, it's breached that $90 a barrel mark. That's virtually almost a 30% appreciation in crude oil prices, and the RBI will have to factor that in. The INR US dollar has cooled off, in fact, a bit, so pressure around that will be slightly lower. It was at 75 rupees a dollar the last time the RBI met. It's currently at around 74.7. The 10-year bond yields in the US have appreciated substantially. It was at 1.43% the last time the RBI met. Currently, it's at 1.95% in early trade today. In fact, breached 1.96% in trade yesterday. The 10-year Indian bond yields have also appreciated in similar fashion in terms of the percentage yield. It was at 6.36%. Currently, it's at 6.9% almost. And CPI inflation, which was at 4.5% the last time around, is now at 5.6%. Broadly, this is the expectation as well as the backdrop for the announcement that is expected to happen tomorrow.